So, hi everyone, I am Crystal Faith P. APIT and I am the first reporter. So now, we will be discussing the chapter 4, which is all about the ratio and trends analysis. So basically, tonight, now we will just discuss all about the analysis of a business by using ratios and trends. So let's proceed with how to use ratio. So ratio are very useful in determining the relationship between numbers. So ratio do not have solely to be used on financial information. So it means that ratio will help us identify or understand how well the company is operating. So by using ratio, we can easily identify or understand if unsa na ang dagan sa ato ang company. But ratio, we will not use it solely. So we will just not rely on jud dapat. Kailangan na po ta other things nga i-consider aside from ratio. So, in the book, there are two examples stated nga nag-show siya nga nagamit og ratio. First is this one, the comparison between the direct and indirect labor. And the second one is all about the sales level. So, we use ratio so that we can easily understand or know if kinsa ang mas better and mas daghan, because instead of using the plain numbers, we use ratio so para madali masabtan. So like for example, we use ratio by comparing one thing to another thing. So it means that ang ratio makapahatag po na to better idea but not the whole. So next is, let's proceed with a caveat. So a caveat, the other definition of caveat is it is a warning. So it means na ay warning gihatag ang book. So the majority of this chapter covers the measurement that give a controller a better idea of the status of company operation. The keyword is better, for one should not rely on solely on these measurements to judge the company operation. So as what I've said earlier, that we will not rely on the ratio only itself, because if mag-rely ra sa kaana, dili sa ka makatag og complete details, because naman say sometimes nga mas better imo ratio but in reality dili siya, because it depends on the situation, or it depends on how to use ratio, on how you use the ratio man god sa isa ka situation. So it means nga ang kuan lang, ang ratio makahatag lang siya og better idea and makahelp siya, but not the complete or the full details about the operation of your company. So a good manager uses measurement only as a part of the body of knowledge required to do throughout job of effectively and efficiently running a business. So what I've said earlier, that there are also some factors nga dapat i-consider ang manager or ang controller para makahatag din siya og mas better o mas sakto nga information about sa imong company operation. So these are the these are the other factors nga i-consider sa controller, like the branding, company organization, competitors, goals, management team, marketplace, monopoly products, new market activities, and product pricing. And by understanding or considering these factors, you can have the complete picture out of your company operation. So again, you will not rely on solely sa kuan ra jud sa ratio itself. Dapat i-consider nimo ang other things, because ratio makahelp lang siya but dili siya complete, because naman ko siya sometimes nga okay ang ratio but in reality dili siya. So now let's proceed with the profitability of measurement. So this section provides the ratio and percentage calculation needed to extract this information from the income statement. So there are six measurement. So let's begin first with the break-even point. So this is the sales level where the profit is zero. So the formula in getting the break-even point is sales divided by average gross margin. So this is important because it tells us if when the company is earning money. So if taas ang break even, so it means that taas ang cost or gamay ang margin. So second, the number of the number of times interest earned. So this shows the company's ability to pay debt. So the formula naman sa in getting this ratio is cash flow divided by average interest expense. So if the ratio is low, so it means risky ang company, or there is a possibility nga ang company di makabayad sa ihang utang or sa ihang debt. So the third one is the operating margin. So operating margin shows margin by division, product, or segment. So the formula in getting this is revenue divided by cost of goods sold. So if the margin is low, so it means that the business is not suitable or sustainable in the long run. So the fourth one is the percentage return on net sales. So this tracks on overall performance. So the formula in getting this naman is net profit divided by net sales. So mas maayo kung makita ni siya sa trend line para makita nimo if increasing ba siya or decreasing. So the fifth is the sales return ratio. So the formula in getting this is sales return divided by gross sales. So this helps us spot on the problems in quality or distribution. So if the ratio is high, so it means that daghang mga products nga nabalik sa inyo ha, maybe kuan ba siya damage or other possible nga reason. So the sixth and the last one is the sales profit per person. So the formula in getting this is sales divided by total full-time employees. So this shows how efficient the workers are. So if taas ang ratio, so it means nga mas productive na siya nga employee kay daghan man siya og halin or sales. So that's end with my report. Thank you.
Good day everyone. I am Mariffer Gepanaga, and for today, I will be tackling about the measures for the balance sheet. So, what is a balance sheet? A balance sheet gives a snapshot of a company's financial position at a certain point of time to truly understand what the numbers means. So, as a financial analyst, you need to use ratios and percentage. So, these measures reveals a company's financial health, strengths, weaknesses, and they shows how much debt a business carries, or how well it uses assets, or how easily it can pay debts. So, the condition of its property and equipment, and whether it is creating value for the owners. So the key measurement, we have many of those ratios. So first things first, we have the debt to equity ratio. The debt to equity ratio, it measures how much of the company is financed by debt compared to its owner's equity. So if you have a high ratio, it has more debt and higher risk. If you have a low ratio, more reliance on its owner's funds and safer, but it limits the growth. So the second one is the return on asset. And by the way, I will be showing you later on the illustrations of all the formulas that you can get these ratios. So next is the return on asset. So the return on asset, or ROA, shows how efficiently the company uses its total assets to generate profit. So if you have higher ROA, means the company is good at turning investments into assets, or and assets into earnings. So from assets to earnings, it's the ROA will shows you that. Okay, so the illustration shows components of return of assets. So we have an illustration of the return on assets, which is the illustration of it. So first is return on asset. ROA is measured of how well a company uses its asset to make the profit. So it is calculated as a ROA is equals to earnings ratio times turnover. Okay, so next is the earnings ratio, or what we call profit margin. So this tells us how much profit the company keeps from its sales. So it is calculated by dividing earnings by sales, or where earnings comes from sales minus cost of sales and expenses. Okay, so in other words, the earnings ratio is about profitability. Okay, so next is turnover, which is called the asset utilization. So this shows how efficiently the company uses its asset to generate the sales. So it is calculated by dividing the sales by the total assets. So turnover is about efficiency in using asset, guys, for your information. Okay, so next is the total asset. Total assets are made up of working capital and fixed assets, right? So what are the parts of working capital? We have the cash, the accounts receivable, and the inventory. So those are the parts of working capital. So the fixed assets, for you to know this one, these are the long-term items like the buildings, the machines, or equipment. Okay, so putting it all together, ROA depends on two big factors. First is how much the profit you make from sales, or how efficiently you use your assets to create sales. So if you increase your profit margin, or earn more per sales, or improve asset turnover, or generate more sales with the same assets, your ROA will improve. So ROA tells us how good a business is at turning its resources, cash, goods, equipments, into the actual profit. Next of the ROA is the ROE, so which means return on equity. So return on equity measures the profit earned for every peso of shareholder equity. So if you have a high ROE, shows strong returns to investors, but very high values may signal too much risk taking. So next is the current ratio. What is a current ratio? Compares current asset to current liability to check its liquidity. So if you have a ratio above 1, the company can cover its short-term debts. If it's too high, maybe keeping too much idle cash or inventory. So next is the quick ratio. A stricter liquidity test, or this exclude inventory, guys. So this quick ratio focuses on assets that can quickly turn into cash, good for assessing if a company can meet urgent obligation. Okay, so next is the sales to account receivable ratio, or the R2, AR turnover. So this one shows how quickly the company collects money from customers. So if you have a high ratio, your customers pay fast and then strong cash flow. If you have a low ratio, slow collection, possible credit risk. Okay, so next is the accounts payable turnover. The accounts payable turnover measures how quickly the company pays supplier. High turnover means pays bill quickly, good supplier relationship. Low turnover, delays in payment, could signal cash flow issues. So next is repairs and maintenance to fixed asset ratio. This indicates how well the company maintains its machinery, equipment, and building. So if you have a low ratio of this, underspending on maintenance, risk of breakdown, maguba jud na siya. If high ratio ganit, too much repair, and assets may be aging. O na siya. Nadyan na siya mga pros and cons in every ratio. So next is the depreciation to fixed asset ratio, a proxy for the average age of asset. So high ratio means assets are older and may need replacement soon. If you have a low ratio, you need a newer equipment and more modern operation. Muna siya ang depreciation to fixed asset ratio. Next is the fixed asset turnover. So the fixed asset turnover measures how efficiently fixed asset like the factories, the equipment, generate sales. So if you have a higher ratios, guys, the assets are productive. If you have a lower ratio, underutilized or overinvested in assets, that is a fixed asset turnover. And next is the retained earnings to capital ratio. This shows how much profit is reinvested in the business versus taking out as the dividends. So in this term, if you have a higher ratio, company prioritizes growth and reinvestment. If you have a lower ratio, more cash is distributed to the owners. That is retained earnings to capital ratio. Next is the EVA, economic value added, compares profit against the cost of capital. So if you have a positive EVA, I'm just kidding. So positive EVA, company is creating value beyond its financing costs. So if you have a negative EVA, it can destroy the value and returns don't cover the capital costs. So next is the working capital productivity. So it measures how well the company uses working capital. Again, what is a working capital? It has the current assets and the current liabilities to support the sales. I mean, you need to minus or deduct the current assets to the current liabilities. So if you have a high productivity in this working capital, you're efficient, lean operation. If you have low productivity, too much capital tied up in the receivable inventory or the payables. Okay, so I'll be showing you the illustrations of containing its all equations. And I will be also going to discuss the measures for growth. So growth measures shows how the company is moving forward over time. They help spot problems early and assessing competitive strength. So the percent first of the measures for growth is we have the percent change in cash flow. So the change in cash flow tracks the movement of cash coming in and going out. So declining cash flow is often the first warning sign of financial trouble. So consistent growth in cash flows shows strong financial health. So that is the percent change in cash flow. Now, second is the percent change in earnings per share, or the EPS. This measures how much profit is earned for each share of stock. So if your EPS is growing, it means it's increasing profitability. And if it's declining, it means profit are shrinking or new shares are diluting the earnings. So that is the meaning of the change in earnings per share. Next is change in market share. What is the change in market shares? So this shows how sales compare to competitors in the industry. Again, shows how sales compare to competitors in the industry. So if your market share are increasing, it means you're gaining customers and competitive advantage. If your share are decreasing, losing ground to rivals. It means naglabaw na inyong competitors dira sa market if you're decreasing share. So that is business, guys. Next is the percent change in sales. This tracks revenue growth over time. So if your increase or if your sales are steadily increasing, it means your business is healthy expansion. Or if your sales suddenly drop, it's possible of loss or customer or poor demand, or worse, will file for bankruptcy and change in sales. So the summary of my report is all about the balance sheet and the growth measures. Again, let me recap to you. What is a balance sheet measures? This will tell you if the company is stable and using resources wisely. So the growth measures, on the other hand, will tell you if a company is improving or beating competition.
Good day everyone, I am ALTHEA the ARRABIS and I will be continuing the report. So, the next topic is the measures of cash flow. So, ang cash flow guys, it is considered the real financial health of a business because while profit can sometimes be manipulated by the accounting methods, ang cash shows the actual ability of the company to survive and operate. So, if ang company a company can show profit on paper but still collapse if it runs out of cash. So here are the important measures of cash flow. So first is the cash flow adequacy. So when we say cash flow adequacy, these measures checks if ang operating cash flow is enough to cover recurring
obligation, mga big obligations such as kanang rent, payroll, and loan payments. Like for example, imagine a company that needs 1 million sa para sa ilahang rent, salaries, and bank loans. So if ang ilahang cash flow is 1.5 million, then naa sila 500 nga nahabilin after sa mga expenses. So this is considered adequate. Pero if ang cash flow gani nila is 800,000 pesos only, nya ang ilahang need biya for monthly kay 1 million sa ilang katong expenses. So if 800 ilang cash flow, the company will be short, forcing it to borrow or madelay ilahang payments. So next is the cash flow returns on assets. So kaning CFROA is this measures how efficiently assets generate cash flow, and it is similar to return on assets, but instead of profit, it uses cash flow. Like, for example, if ang usa ka factory owns 5 million worth of equipment and maka-generate sila 1 million in cash flow. So if imo na siyang i-solve para makuha nimo ang cash flow return on asset, naa kay 20%. So that tells that the management ang katong ilang gi-invest sa heavy equipment kay it is paying off bitaw kanang na naka-generate ra sila og money ba or naka-ginansya ra sila sa ilahang gi-purchase nga asset, nga equipment. So next is the cash flow to sales ratio. So this ratio shows how much of the sale actually return into cash. And sometimes company nabiya sila, ang usa ka company kay high ilahang sales but low cash inflow because ang mga customer they buy on credit. So ilahang utangon. So ang company naka-sales already sila pero wala sila dadawat ka cash since utang man. Like for example, if ang usa ka company kay na ay 2 million in sales but only 400,000 in actual cash collected. So if imo na siyang i-solve, that's 20%. So this is more reliable than just looking at the sales revenue. So next is the dividend payout ratio. So this checks if ang dividend given to shareholders are sustainable from cash flow. Kay if ang company gives out too much, it risks losing money for reinvestment. Like for example, if ang company has 2 million in cash, 2 million in cash flow and pays 500,000 in dividends. So that's 25%, which is sustainable siya. Pero if ang company gani pays 200 million sa dividends, that's 100%. So wala na mabilin sa company for growth or emergency baron. So next is the long-term debt repayment ability. So this checks whether a company can repay its long-term debt from cash flow, and investor and lenders closely watch this jud. Like for example, if ang company na ay 3 million sa long-term loans and nag-generate sila 1 million yearly cash flow, so it can repay in 3 years. Pero if ang company gani only generate 200,000 yearly, repayment would take 15 years and ma-risky na gud siya. And lastly, the operating of cash flow. So this is considered the most reliable measures of a company health. So it shows the actual cash coming from daily operation, excluding the financing and investing activities. Like for example, ang business reports 1 million net income, pero its operating cash flow is only 200,000 pesos because most sales are on credit. So red flag siya, meaning that While the business looks profitable sa paper, it doesn't have enough cash to sustain operation since daghan man kayo og utang. And to sum it up, cash flow measures are critical because cash is king, and a company can survive without profit for a short time, but without cash, it will collapse quickly. Now, let's proceed to non-financial performance measures. So, the ring part is mag-focus lang ta sa accounting department. So, when we say accounting department, it plays a crucial role in ensuring accuracy and efficiency in financial operations. So, here are some measures. First is the average collection period. So, here, this shows the number of days it takes to collect payments from customer after a sale. So the shorter the period, the better because cash comes in faster. Like for example, if ang company they expects customers to pay in 30 days, but instead ilahang pag-collect is nahimong 60 days. So it means customers are delaying payments, which creates cash flow problem. So the second one is the percentage of overdue accounts. So this measures how many customers are late in paying. If high gani ang percentage, signal it means weak ang credit control. Like for example, if ang company na ay 1 million nga accounts receivable and 200,000 pesos nga overdue, so that's 20% of 1 million. So this shows poor collection efficiency and makalid siya og losses if ang customer kay dili mo bayad. So the third one is ratio of purchase discounts to total purchases. So ang company often gets discounts for paying supplies early. So this measure shows if the company is taking advantage of those discounts. Like for example, if ilang supplier gives a 5% discount for early payment and the company makasave sila og 10,000 out of 200,000 in purchase. So that's a 5% discount ratio. So if higher ang ratio, that means ang company is smartly managing its payments. So the next one is the transaction error rate. So this measures how often mistakes happen in recording transaction. Because error can cause incorrect financial statement and it can affect the decision making. So if example ani is if out of 1,000 recorded transaction, 5 kabuok ang wrong. So the error rate is 0.5%. So even if small error rates, if frequent gani, it can really lead to serious problem in audits and reports. So the last one is the transaction process per person. This indicates staff efficiently. If higher number of process transaction per employee, that means ang ilang department is working productively. Like for example, if ang accountant process 50 transaction per day, while ang another process is only 20. So ang management need to check if it's due to lack of training, system inefficiency, or work distribution problem. So that would be all for my report.
Good day everyone, I am Kristen Joy ALSOLA, and today I'm gonna talk about the customer service and distribution measurement. So diri nimo makita og masukot ang performance sa usa ka company og sa pag-deliver sa product. So first is the customer turnover. So diri nimo makita if pila ka customer ang stop og palit sa imong product sulod sa usa ka business. Kung taas gani ang turnover, possible nga naay problema sa inyong service or imong product. For example, this year kay na kay 1,000 customer, and then Pag next month kini 900 na lang, it means nga 10% ang nawala sa imuhang customers. Next is the number of customers complaints. So diri mo makita if pila ka customer o unsa kadaghan ang ni-complain sa imuhang product. For example, 50 customers ang reklamo nga imong na-receive sa 1 month. That could mean nga deeper issue like naay mga problema imong business nga wala lang kakabantay. So need to nimo solusyonan. Next is the response time to complaint. So dali nimo makita if unsa kapaspas ang imong company mo respond sa mga complaints sa customers. For example, sa Shopee, diba naman na yung mga review nga makabutang sa ubos. Kung maka-reply gani dayon ka, diba ganahan or na mo reklamo nga kay magpa-refund. Kung maka-reply gani dayon ka, kung paspas gani ma-reply imong kung paspas gani ma-fix dayon ang issue, mo hatagay na og mga good reviews ang mga customers. So next is the distribution measurement. So kung unsa ka maayo ang company mo deliver sa ilahang product. So first is the average delivery time. So this tracks how long it usually take for the product to arrive to the customers. If kung pila ka days ma-arrive ang imong product sa mga ni-order mo na ang pasabot sa average delivery time. And then percentage of on-time deliveries, 3 if makita if pila ka percentage ang imuhang nahatod on time or mas early pa. Also, this is important to gain more customers. For example, 950 products imong nahatod on time out of 1,000. So it means nga naay nasa 95% ang na-success nga imuhang nahatod. That's good for your business. And lastly is the percentage of products damaged in transit. So dili makita if pila ka product ang naguba nga imong nahatod sa customers. If daghan gani ang naguba na product nga imong nahatod, of course ang mga customer dili na mo palit sa imuhang mga gipagbaligya, diba? So need nimo ang uban customers kay mo asman og refund. So need nimo ibalik ang ilahang mga kwarta para dili ka mahatagan og mga bad reviews. For example, sa Shopee or TikTok, if diba first time mo order kay matan-am jud ta sa reviews. So if bati gani ang mga reviews kay dili ta mo order ana. So importante jud kaayo nga tan-awon ipak jud nimo maayo ang ilahang mga gipang order para dili maguba ang ilahang mga product. That's all.
I am AIZEL GODINEZ and I will be discussing about engineering measurements. So imagine building a phone but ordering the wrong battery size, or like designing a car where the engine doesn't fit. So it's a total disaster, right? That's why engineering measurements are very important. So the engineering department affects not just the cost of a product, but also how smoothly other departments like materials management and production can do their jobs. If engineering is efficient, the whole company works better. So here are the measurements or the main points. Number 1, we have the bill of materials or the BOM accuracy. So this is like a shopping list for building a product. Engineers have to say what parts are needed and how many, because if they get it wrong, the material team ends up guessing and makalead jud siya sa waste of money and as well as waste of product nga napalit. So the formula of this is to divide the number of accurate parts by the total lists of parts needed. Number 2 is the number of patent applications. So patents show how innovative a company is. The more patents filed, the more advanced the research usually is, but patents don't guarantee success because they are just the start of creating new products. There is no formula needed in here, just a count of applications filed. So number 3 is percentage of sales from new products. So it's not enough to just launch new products. What matters is how much sales they actually bring in. That's what it's all about. So the formula of this is to summarize the sales from new products and then divide it by total sales. Percentage of new parts used. If engineers keep inventing new parts, the costs will go up. That's why companies check how many new parts are used compared to the old ones. So to calculate this or to track it, compare the bill of materials for each new product to the existing list of parts in inventory to see which items are new. Then you have to divide the number of new parts by the total number of parts used in the product. So we have percentage of new products introduced. So this one is like old products cannot last forever, so companies need fresh ones. So number 5, we have the percentage of designs meeting target costs. So a product won't succeed if it's too expensive to make. That's why engineers aim to meet cost targets. And then number 6, we have time from design to production. So this is actually the last one. It is where the engineers have to be able to produce new product designs as rapidly as possible in order to beat the speed with which competitors are introducing products. So to calculate it manually, note that design start and end dates and then subtract the former from the latter to derive the total number of design days. Next, I will be discussing about human resources. So, when you think about human resources or HR, what comes to mind? So, most of us think of job interviews or payroll, right? But HR does much more than that. It plays a huge role in keeping employees happy, making sure that the companies follow government rules, and controlling labor costs. And just like in engineering, HR also uses measurements to see if they are doing a good job. So the main measurements are number 1, average time to fill requested positions. So one of the HR's biggest jobs is hiring. So in the fast-growing companies, the speed of hiring can make or break the business. The faster positions are filled, the better. So to calculate it, create a logbook in which are recorded the dates on which all new position requests are received by the human resources staff, and as well as the dates on which offer letters are accepted by recruits. And then the difference between the two dates is the average time to fill requested positions. So number 2, average yearly wage per employee. So this shows how much on average employees are earning in a year. It helps management to see if pay is competitive. If pay is too low, people might leave for better jobs. To calculate this one, you have to use a report writer to create a standard report listing everyone's pay rate. This usually requires 2 lists, like one for the hourly staff and also one for the paid staff. To summarize each list, multiply the total on the hourly employees list by the total number of standard hours worked in a year, usually 2,080, and then multiply the total on the salaried employee list by the total number of pay periods, and then add the 2 lists together and then divide by the total number of employees. Employee turnover rate. Turnover means how many employees leave the company. So high turnover is very costly because hiring and training new people takes time and money. That's why this is one of the most important HR measurements. So to calculate the employee turnover rate, you need to add up the number of people who have left the company and then divide by the number of employees at the beginning of the measurement period. Number 4, we have indirect to direct personnel ratio. So this measures if a company is becoming too top-heavy with overhead staff like admin or accounting compared to direct labor like production workers. If the ratio gets too high, it could mean that the company is wasting resources. So to calculate this one, we have to summarize the number of personnel in overhead positions. Like the easiest way is to use the payroll system to list personnel by department. And then you have to divide that number by the total indirect labor position. Number 5, we have the minorities percentage. In many companies, HR also tracks workplace diversity. The percentage of minorities is often required for government reports. It's also very important for inclusivity in the workplace. So to calculate it, or the best way to track this information, is to record a minority code in the payroll or the human resources computer systems for each person, so that a simple computer query can extract the information needed for various government reports. Number 6 will be the ratio of fringe benefits to direct labor. Fringe benefits include things like medical insurance, and this ratio shows if the company is spending too much on benefits compared to direct labor costs. Management uses it to decide whether to cut or to maintain benefits. So the last one, we have the trend of headcount. This is where HR often looks at headcount trends, how the number of employees changes over time. It's most useful when compared to company activities like revenue. For example, if headcount goes up but revenue doesn't, then that's a red flag. So headcount is easily extracted from the payroll database, though one must be careful to translate any part-time staff to full-time equivalents to ensure comparability across time periods. So that's all for my part of the report.
So, I will be continuing the reporting on the material management and the product management measurements. So, first is the material management. So, there is a purpose why we conduct material management. First is to track the efficiency, to reduce waste and cost, to ensure materials are available, and to avoid delays. And there are 6 measurements. So, first is the inventory accuracy. So, inventory accuracy is all about that the inventory database must accurately reflect the quantities, part numbers, and location of all inventories and stocks. So, this means na kanang dapat i-ensure mo nga sakto ang inventory na nakalisting mo, because if not, it may cause over-ordering na makagasto pa ka since wala lang kita na-check if available ba din or not. And also, to solve this problem, the staff could list a printed list of inventory and its location, so you will know nga asa ng pangitaon, asa ka dapat makaibaw kung kasi wala mo yun sa dili. Next is the inventory turnover. So this is one of the most important material measurements, since the management is conducting or checking the proportion of inventory in stock as compared to the cost of goods sold. So if higher ang inventory turnover, it means that you have an excess or like a huge amount of inventory in stock. So third is the number of suppliers used by the commodity code. It is about utilizing the services of a smaller number of suppliers, because if mag-utilize ka smaller number of suppliers, dili ka maglisod o pangita sa mga suppliers, di ka maglisod maglibog o asa ka mubayad sa inyong mga suppliers, since kanang smaller suppliers or like fewer suppliers means easier ang pag-manage o stronger ang partnership, since kanilaan naman yung sabutan ng contract. And that is the obsolete inventory percentage. Obsolete means kanang unused product or like no movement products at all. So it is all about a controller needs to emphasize that eliminating the cost of obsolescence is a primary method for reducing the costs. So first, ikaw sa'yo identify unsa ta mga unused products, and then i-divide mo sa cost ang atong mga unused products to know nga pila jud ang atong mga nasayang para kabaw sa kapila mo need ibawi na expense the next time. So, how do we calculate for obsolescence? First is, extract ni mo tanan inventory and pangitaon ni mo kung sa mga no movement ng mga ganing mga materials or like mga products or parts and components. Then next is, imuhang i-solve or like imuhang i-compute pila ang cost atong mga unused product and then i-divide mo siya sa pila ang total na inventory, and then the result will give you the measure of the obsolescence. Makaibawan pa pila po ang mga like mga walay gamit ng mga materials to know for the next time nga kabalo na ka panagpaon saan mo pag-reduce ang obsolescence ng mga inventory. Fifth is we have the percentage of on-time part delivery. So, it is the most important functions of the material management staff to ensure that the parts of the components arrive on time, because you need to compare kung ano saan yung request ang kanyang mga materials o kano saan siya actually na-deliver, because the material management staff is the one who will inform sa mga personnel sa sa production process para makabalo sila until when or like kano saan sila mag-start sa production process o kano saan naabot ang mga materials na needed. And this is to ensure that smooth ang production process. Sixth is the total number of components. So, the material management staff needs to ensure na pila dyan ang total components. This is to ensure na ma-lessen ang mga expenses kay if ever na hindi nila matarong i-have total number of components. It may result to over-order sila kay kanang wala sa kabaw nga naa na any or like ma-double order, and then too many unused na kaning mga materials or unnecessary materials kaya makadala lang siya expense, and this will lead to lower profits sa kaning company. Moving forward with the product measurements. So the purpose of conducting product measurements is to ensure the product's quality, the customer satisfaction, that it guides improvements, and also to reduce waste. And first is the average setup time. So in a just-in-time manufacturing environment, it is important or it is critical to produce only what is immediately needed. So kay shorter siya set time, mas smaller o mas mahatag din mo ang mga needed na batches for that certain product. And next is the percentage of acceptable product completed. So the management should know kung unsa nga proportion to ang mga acceptable products versus the defective products. So you would know kung unsa to maihap mo pila kadagan ang defective products, and this is kaning defective products means kung ano diya naanay guba or like naay defect or at least na ay mga hugaw mga products. So ang kanyang mga products, you can sell it to a lower price or like if buy one take one, but you need to inform the mga customers po na naanis lang yung defect. So it is important na jud nga yung mga maon ang conversion sa acceptable products pala malahi mo ang defective products sa acceptable. Third is the percentage of scrap. So scrap is different from defective products. Kaya ang defective products is asel pa man kaani since naiuban defective products nga gamay ra siya guba, while the scrap is scrap na gid siya, like trash na gid siya sa product na gidpat nimo, and then you need to kaning habaw ka sa pili percentage of scrap kay para ma-ensure mo nga efficient ba na siya nga equipment and use mo sa production, since kung daghag scrap and it means nga kaning dili efficient mo ang equipment, like kasi wala siya natarong pagka-evaluate, wala siya natarong pagka-set up ninyo, daghan siya mga issues ang inyong equipment if daghan mo og scrap. So this is important for you to know the next time kaning magamit mo sa mga materials o sa mga equipments is to check na ganun regularly yung efficiency para magamay na ang kaning scrap percentage of scrap. Last is the work-in-process turnover. So a company that is focusing on improving its just-in-time manufacturing system uses the work-in-process turnover rate as one of its primary measures of success. So it means na higher work-in-process turnover means efficient and just-in-time system.
Measurements. These metrics evaluate a firm's performance in attracting customers, fulfilling demand, and competing in the marketplace. So market share. So the percentage of total industry sales captured by the firm. So it shows competitive strength. Number of major accounts for which the company is a preferred supplier. So for this, it indicates how many significant customers view your firm as their primary vendor, reflecting brand loyalty and relationship quality. So ratio of backlogs to sales. So this ratio measures how much unfinished or pending orders, or what we call backlogs. So a company has compared to its total sales. So it also helps businesses understand if future sales are secure or if there might be production or delivery delays. So in sales trend by product line measures how sales for each category of products are increasing, decreasing, or staying the same over a period of time. So it helps businesses understand which products are performing well or which need to improve and where to focus resources. So in interrelationship of ratios, so in business or financial analysis, ratios are not meant to be looked at in isolation. So the interrelationship of ratios means that different ratios affect or complement each other, and by analyzing them together, it gives a clearer and more accurate picture of a company's performance. So setting up a system of ratio and trend analysis is a method in financial management and performance evaluate where a company organizes and monitors key financial ratios over time to understand its performance, detect changes, and make better decisions. So it is all about creating a structured approach to analyze data rather than looking at ratios or trend in isolations.